What's up, guys? It's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Boeing, ticker symbol BA, trading for $193 a share as of June 17th, 2020, equating to a market cap or capitalization of over $108 billion. No one can deny that it's been a crazy trip for Boeing investors. When we look at Boeing's year-to-date chart, we see that BA was trading for $373 a share a year ago, which represents almost a 50% loss for investors. However, as always, it's a matter of timing. Not all investors are having a nightmare at 20,000 feet. As we can see here, some recent investors made bank. In the last 3 months, Boeing's share price has made that juicy 100% gain. So what's the move? Should we cancel our flight? Or is this a once-in-a-lifetime opportunity to the Billionaires Club? This is a story of Boeing's company, once an American icon, who lost its way and whether or not it can find its way back to the sky. As always, here at Quick Stocks, we aim to give you a deep analysis of the company and furthermore their share price to see if we can make y'all some of that sweet, sweet green dopamine. And for a company like Boeing, that entails a little quick stock philosophy before we can deep dive into the numbers. It's about reputation. Yes, everyone understands that flying is still way safer than driving. However, a lot of people have conflict with that statement now. Even if the assumption isn't based on solid ground, you gotta remember, humans are irrational and act upon emotion. Once Boeing's 737 MAX is cleared to take off, I guarantee you a lot of people are not going to want to get on a plane with Boeing 737 written on the side of it. I mean, for real, I'd be willing to bet that Boeing paints over their own logo. And I mean, what does that say for a company that needs to hide their own brand? And this isn't even taking into consideration people's reservations regarding the global pandemic, or when normal air traffic will resume. And the thing is, the company was built on being a manufacturing icon. People dreamt of working for Boeing and what the company stood for. However, the times have changed and we are a far cry away from the golden days. The company made a ton of moves to position away from engineering prowess and innovation to focus on profit. And for a while it worked out, at least from an investor standpoint. The thing is, if you want to be a place where the greatest minds of our generation want to work, you gotta fuel that creativity. Simply put, a lot of people who are going to change the aviation world no longer want to work for a company like Boeing. And on top of that, the people that are already working for the company, including 68,000 employees who had their pensions frozen, which I understand the reasoning, but I can assure you most of the people affected aren't going to be as understanding. And with 68,000 people affected who work together every day, hopefully they have a good HR, because I can only imagine the tensions inside those facilities. And on top of this, from 2014 to 2019, Boeing bought 38 million of its own shares back, which represented over 90% of their cash being returned to investors, which at the time was great. However, hindsight is 2020. They bought back insane amounts of shares, paying dividends, all while laying off senior engineers and freezing employees' pensions to hire cheap labor in India. It's gotta be a bittersweet moment for employees. Once again, from an investor standpoint, I get it. But from a moral standpoint, that's bad, okay? Anyways, as much as I would love to deep dive more, I will spare you guys from how we believe the effect of the global pandemic will affect air travel in the future. As we haven't even taken a look into the numbers, I'm sure a lot of you are thinking that I would never start a position in Boeing. However, pump the landing gear, boys. I gotta give the 737 MAX props where it's due. With its unparalleled fuel efficiency and range flexibility, which is great as consumers become more aware of environmental impact, the market will certainly gravitate towards fuel-efficient planes. And I mean, for real, they've got at least 10 years before Papa Elon makes the first Tesla fully electric cyberplane. I kid, kinda. But it does lead me to my next point. Boeing has already conducted its first test flight of its all-electric autonomous passenger air vehicle, which is actually kind of a big deal. Simply put, there are no electric-powered aircrafts or even gas-electric hybrid aircrafts in commercial operation today, which represents an insane untapped market. And this is just the tip of the plane. Boeing has a wide variety of products: airplanes, helicopters, launch vehicles, and space complexes. Boeing is one of the largest aerospace entities in the world and the second largest military supplier in the United States. And considering everything going on, it's great that the company is not solely dependent on commercial flights. Boeing's defense, space, and security segment accounted for over $26 billion, or 34% of the company's total revenue in 2019. This segment develops aircraft and weapon systems. They also research and develop strategic, defense, and intelligence systems, as well as satellite systems, where in 2019 the US Department of Defense accounted for 84% of the segment's revenue. Which honestly, you couldn't ask for a better customer than good old Uncle Sam. And one could certainly argue that the US government would step in long before the company were to go bankrupt, as they play such a crucial role in national security. However, I gotta note, commercial planes is Boeing's largest source of revenue. So what's the move? Well, Boeing was playing a game of numbers. They were meeting Wall Street expectations. Unfortunately, that came at the expense of end customers and the flying public. And regarding the financials, as of May 2020, Boeing's total debt load was $54 billion, a fat 22 times its projected earnings this year, before interest, taxes, and depreciation, which is absolutely insane. And this equates to around $1.3 billion in outstanding debt interest due yearly. With this in mind, as a long-term investor, I do believe I can find a better company to put my money in. However, the company does have quite a few catalysts for short-term pops. Once the 737 MAX is cleared to take off or quarantine restrictions are completely lifted, I'm sure we will see some nice jumps in share price. It's just when I think of the entire company and everything we've talked about, I don't think Boeing would be a good fit for my portfolio. Anyways, guys, that's all we've got for today. As always, the best investment you can make is to go long on Quick Stocks. Hit that subscribe button now at 430 subscribers and plan an early retirement. I'll catch you guys in the next one.